Hello? There we go. How's that? We're having some problems here. I'm sure why it's not working. There we go. Is that better? No. There it is. All right. I'm going to start every stream like that from now on. Change it up a little bit. Maybe you guys can guess what the actual can that is being opened. We're going to do that for fun. And maybe if somebody gets it right, I can send them some Bitcoin or Ethereum, something like that. Not a huge amount of money, but just something for fun. A little contest we could do like that. Okay, so let's get this going. What I wanted to do was kind of go over something that I was looking at lately for Bitcoin. And that is Elliott wave theory. So I've been looking at doing that. So here's the chart for Bitcoin. Sorry, I'm just trying to do something quick. So I'm gonna put this on Twitter. Probably hear my dog crying in the background. Not sure what she needs. She's wandering around. She probably wants to play. Sorry, give me one more second. So as you can see here on the chart, we have Bitcoin from 2011 all the way here to present day. What do you guys think of the thumbnail, by the way? I really enjoy this kind of style thumbnail. I think it's a lot more cleaner, better, easier to look at. Just trying to see what the quality of the stream is, and it doesn't seem to be great. I'm just trying to figure out why. No, Olive, it's okay. Let me just double check here. Oh no, we are good. It's 1080. Okay, perfect. All right, let's do this. So, we're going to look up something called Elliott wave theory. Elliott wave theory, which is also the energy web token. Elliott, or double T, sorry, wave theory. We're just going to look at something basic and easy quickly. I think it's called this one here, the basic rules and guidelines and basic structure. So basically, oops, not sponsored by them at all. There's going to be a 5-wave structure basically. So here looks very complicated. We got the motion wave, which is going to be this area here from 1, 2, 3, 4, 5, which that is the whole run with the bull run, let's say. We can use that as an example. And then we got here A, B, C as the corrective. But then each one of these between 1 and 2, there's a corrective wave as well. 3 and 4, which is wave 2, and 4 are corrective waves, are basically A, B, C as well. A, B, C. And then with every impulse wave, so from 0 to 1 from this one corner, there's a 5-wave impulse. And then 1, 2, 3, 4, 5. And then inside there's ABC for your wave 2 and ABC for your wave 4. If that it just gives you a quick idea. So basically what I want to do is I want to decide, okay, I'm going to do a grand super cycle. I'm not too keen on knowing the subdivisions of all of them so much because I'm not trading, but I'm looking to plan my long-term game to hopefully sell and buy back again at a lower discount price, which I think everyone's trying to do right now. So, and Bitcoin's making it a little bit harder to do than in the past, I think, and also emotions get into play, and et cetera, et cetera, et cetera. Anyways, so impulse waves, we have 1, 3, and 5. I believe we're here at 4 on our chart up here. So we know that this here was wave 5, ended here, and then there was an ABC, right? We know this is wave 1, we know this is wave 2, wave 3, wave 4, we're looking for wave 5. So let's draw it out. We're on the monthly chart. Let's go to the weekly. Let's see if we can, maybe we'll go back to the monthly to draw it. So everything back here, I am going to not include in this chart. I'm going to put a box around it, but I'm going to show you where I'm going to start my count. If I can find the box. Here we go, rectangle. So from everything from here, we're not going to take into play. This is a bigger, larger cycle on the larger time frame wave count, where you can take the other impulses as well and see that there's correctives, impulse correctives, and pulse corrective. So I kind of just want to focus right on this area here. I'm going to expand it out a bit. I'm going to spread out the time. So if I go here into my tools, there's a bunch of different tools you can use. They're all Fibonacci. We're going to use that in a minute. But here on the left hand side as well, you can look for, there's one that actually, here it is. So these are a bunch of different patterns. X, A, B, C, D pattern, cipher pattern, A, B, C, D pattern. These are all different triangle patterns, three-divisional patterns, head and shoulders. Elliott wave impulse is what I want to use first. Okay? So let's assume that this low here is our 0. Up here we had 1. Up here was our 2. Sorry if you guys can hear my dogs. They're all here to join the party. Let's say this was 3. And now we're at wave 4, which is a little bit longer of a correction. This one's sharp. This one is more sideways. And then we're kind of looking for wave 5. But how high do you put wave 5? That's the question that I've been kind of wondering. So if this account is accurate, and the low was put in on, what was that, January 20th, roughly, 28th, can't remember exactly the day, I don't want to zoom in right now, then where would it put us? So let's see here, guidelines. All right, let's read the guidelines. Impulse wave subdivision into 5 waves. In figure 2, the impulse move is subdivided into 1, 2, 3, 4, 5 minor degrees. Wave 1, which we've had here, wave 3, which is this one here, and wave 5. So if you look at our chart, here's my wave 1, my wave 3, and my wave 5. Sorry if you guys can hear my dog breathing. He's a Saint Bernard. He's quite the handsome fella. I'll maybe give you guys a picture of him one day. So then that's two. That's true. This wave 1 here, 1, 2, 3 are subdivided in subdivisions are impulsive. This is true. We can agree that this is already happening. Wave 2 cannot retrace more than the beginning of wave 1. Let's check it. Wave 2. Let's see if I can get the proper tool for this. Wave 2. Wave 2 cannot retrace more than wave 1, which it did not. Close. It retraced quite a bit of it, but not all the way. Okay, so that's the one. So now we know that this is also true. Wave 2 cannot retrace more than the beginning of wave 1. True. That's probably better for you guys to read, eh? Wave 3 cannot be the shortest wave of the 3 impulse waves, namely wave 1, 3, and 5. Okay, well, so far, wave 1 is not bigger than wave 3, and we don't have wave 5 yet, so we can assume that wave 3, for the time being, is also valid. So wave 4 does not overlap with the price territory of wave 1, okay? Let's check that. Does the bottom of wave 4 correction here, does it overlap the top at 13,000 over here? No, it does not overtop the top of wave 1. Okay, so that's amazing. We now have wave 4 does not overlap with the price territory of wave 1. Also valid. So far, all this is true. Oh, I thought I had the thing on here where we could highlight it, but I don't have it on this one. Sorry. I had to stop using Brave browser because I just found that it crashed all the time and my computer is super slow. Google Chrome for the win. Wave 5 needs to end with momentum divergence. Okay, well, we haven't had wave 5 finish yet, so that I can't validate yet. But so far, out of 6 different guidelines that need to be followed, they're all true. Wonderful. So this theory that I'm looking at right now, for me, 90% sure this is what's going on in my brain. So the Fibonacci levels for the retracement, so wave 2 is 50%, 61%, 76, 74%. So, hey, 76.4%. Interesting of wave 1. Let's go look at that. Wow, we got down to 71%. Interesting. Okay, pretty bang on. Or 85.1 of wave 1. Wave 3 is 161% or 200% of wave 1 and 2. Okay, so they're saying between this level, between wave 1 and 2, so this level here is going to be 161% of that. So if we want to do that quickly, let's see if it's true. I'm not the greatest with Fibonacci yet, practicing. We're going to use a fib base time. Not going to be perfect. We're going to go from here to here, bring it down to wave 2, and let's check the settings. So what percentage were we looking at? 161, 200, 261, or 362? So we know it's not 262. 161 or 200. Let's do that. I don't have a 200. 161. Let's change this one to 2. And then also 261. Oh, I needed that one. 2.261. Sorry, bear with me, guys. 323.6. 323. 323.6. And then we need 2. Let's just use 4. Okay, so let's assume that that's what it is. Okay, well, I measured it wrong because it's from the bottom to this, is it not? And I don't know if my Fibonacci is in log. Based on log scale, yeah. So wave 3, oh, look at that, is exactly 2. Amazing. Okay. I'm learning with this with you guys. So I took my Fibonacci tool, took it from the impulse wave 1 here to here, brought it down to the bottom of wave 2, and I basically got the exact high at extension of 2, which is unreal. So here, if we had known this prior, we could have been investing and making swing trades, selling here, because we know we flew by this one here, the 1.1618. We flew by it to only then slow down, find sellers, because that wick came back down, to find more sellers at this price. And then we had the rollover, came down here in May, took us 2 months, 3 months, and now we're back up here. 1, 2, 3, 4, almost 5 months of up. Found a new high just above the 2.0, 200% basically extension of that wave to now be down in a 4-month downtrend. Okay, cool, amazing. So we were able to figure that out. So this is also true. Wave 4 is 14%, 23%, or 32% of wave 3, but no more than 50%. Okay. Let's just do that quick. We're going to go here. Fibonacci retracement from the high to the low of wave 3, which starts down here. Oops. I'm going to go here to my settings, and 50% would be here. Oh. Could this be true? Did I do this right? So I didn't do it exactly on the high, on the exact numbers, but it looks pretty darn close to this $35,000 level, which both candles close, which is 50% of the wave. Crazy. Wicked below, but never closed below. Okay. So that was the retracement of that, which is also now true. There are 3 different ways to measure wave 5. Perfect. This is exactly what I was looking for. Then I'm going to cut it off. We'll call it a day, and then I'm not going to bother you guys for a little while. First, wave 5 is inverse 123 to 168 retracement of wave 4. So let's see if we can do that. Wave 5 is inverse 123. Okay, so let's do that. Let's do the retracement. Inverse. Settings. 123. I gotta double check. 123 to 1618. Okay, so 123 and 1.16. Oh, I did it backwards. Okay, so if that were true, it would bring us to, just make sure I'm on log. Fibs based on log scale. Oh boy. Okay, so that would bring us to $100,000. So I did the inverse. So I took from low to high. Inverse of that gives us a pocket between 77,000 and 100,000. So just for fun, let's just do that on, let's just say that was wave 4. So if we were to say that the top here was 65K, and this is top of wave 3, and then this was the bottom of wave 4, saying that account was smaller, not as lengthened correction phase for A, B, C, then we would say that it's 109,000, or between 79 and 109,000. So that's another thing that shows me that in my mind that it's not the top. So let's delete that. That's one way to calculate it. Or, second, wave 5 is equal to wave 1. Let's do that. So let's just do that. Fibonacci extension from here, from the bottom of wave 4, which becomes here. Let's go to our settings. Let's get rid of everything that is not 1. $135,000. Okay, so now we know that we're going to be anywhere between 70 to 135,000 based on those two different ways, and there's a third way. Okay, wave 5 is 61% of wave 1 to 3. Okay, let's do that now. Wave 1 to wave 3. Change this to 61. Let's do that. That gives us 200,000. So now we got a pretty big window, which we know from 77K, roughly, to 200,000 could be the top. So now what I want to do is, okay, I found out those levels based on Elliott wave theory. Now I want to see if I can find any other reason that would show confluence, so more than one thing, that would match those numbers inside this area. So this is my box. We're going to name this cell zone. So for me, my plan now, if I can figure out how to do this, cell zone. That's my cell zone. So anywhere in here, wave 5 could end. So I need to figure out confluence on another level. So maybe this $77,000 level here is not valid, and there's a reason for it. I need to figure that out. And maybe there's this $200,000 level that's not valid for it. But I haven't taken any profits, and I bought back down here on like at the bottom of wave 2. Like pretty much right at the bottom. I couldn't have gotten any cheaper. So I need to start taking profits. I should be taking profits probably here, but I don't need the money right now. I'm not hurting for it, so I'm going to wait out and see if I can get my profits taken in this zone. That's my plan. That's what I'm looking for. That's what I'm looking at with this Fibonacci stuff. Fibonacci, Elliott wave theory. It goes really into detail. I'm going to be reading a couple books, and I think I'm going to be focusing a little more on this type of stuff because this is what I want to learn, and the best way to learn it is to teach it and get it wrong so I can improve on it, basically. So there's a bunch of different things, zigzags, flats, triangles. We'll go over that another time. But this here is going to be super helpful for me to determine that I know, okay, well, Bitcoin bull run's not over. I don't have to go to crypto Twitter to find that out. Don't have to read all of this stuff about people freaking out, saying we've bottomed, we're not at the top, blah, 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 blah. This on-chain stuff. I'm just going to sit and chill. Sit and chill. Not ideal close. Fear. I get it. It sucks. Lots of stuff going on here. All I know is that we just need to take a time to chill and watch the plan. So next time we're going to talk more about the corrective waves. How this, if wave 2 does a certain thing, wave 4 usually does another, and vice versa. So, and these can be read on all the bunch of different time frames. And maybe next time we can try and draw the larger time frame of the whole cycle where we are. Maybe this is wave 3 in the big cycle, and then next one's wave 4 big crash, and we see a big pump next time. Or this could be wave 5, and then there's a huge crash after. We'll find out. But we'll try and figure that out together, see what we think. And I need to keep learning this stuff, and the best way to keep myself engaged is to talk about it. So this one here, I always like to take a look at this one, but don't use it as your only thing that you're going to use. But Oh, I never tweeted that we were live. Oh, sorry guys. Alright, well, there it is now. Alright, well, that's all I got for you. This page isn't loading. Oh, yeah, here you go. So this is the confidence that the bull run is over, and we're at 41. Puts a whole bunch of data together. Super interesting. If you like charts, I think it's just a cool, fun fact. Not necessarily to go off of 100%, but that's why I'm creating my Elliott Wave Theory game plan. And I'm going to do some more research, some more reading, and to see if I can validate my thoughts on this count. Thanks so much for joining. My name is Matt. Let me know if you can figure out what I was drinking earlier today. I will give you the answer. It is not a beer. Have a good night. Bye.